everybody is oblivious, right? They're still trusting the Fed. They're cheerleading the bubble the same way they were in the 2000s, the same way as they were in the 1990s. They've learned absolutely nothing from their mistakes. In fact, I remember when I was on CNBC and I was being interviewed by the late Mark Haynes, and this is probably 2005, 6 timeframe, and I was explaining the housing bubble. And Mark Haynes, then interrupted me, or I don't know if maybe he didn't interrupt me, but his next point was, wait a minute, Peter, are you telling me that there's a housing bubble? You really want me to, or expect me to believe that we have a bubble in housing? Because we just had a bubble in stocks not 5, 6 years ago. And these are like once in a lifetime or once in 100-year event. Are you telling me that we have another bubble in housing so close to the bubble that we had in stocks? And I said, yeah, Mark, that's exactly what I'm telling you. And I said, and of course, the bubbles are related to each other because they have the same source. They both got their air from the same Fed. But the Wall Street was clueless. And now we have an even bigger bubble than those two bubbles combined. And people still don't get it. And the Fed doesn't get it. Or at least publicly, they won't admit it. Who knows what they get privately?
Yeah, for the Fed to telegraph that the next several years we're going to have virtually zero interest rate is basically throwing, the way I see it, is you're throwing gasoline on the fire. You're basically telling people to speculate.
Well, in fact, the reason they're reassuring the markets that rates are going to be at zero is because if they let the markets know that rates were going to go up, the markets would crash because it's the low rates that are propping it up. So they're trying to assure the speculators, hey, I'm not going to end this party. Just keep dancing. The music's not going to stop. But this is just meaning that the problems are getting worse, the bubble's getting bigger, and when the music eventually stops, not because the Federal Reserve wants to stop it, but because the markets will stop it, we're going to have a crash in the dollar. That's what's going to end this party.
And when do you see that?
Well, it's long overdue. So, we're literally living on borrowed time, which is why I tell people, be prepared in advance. Just like when people ask me, when is the real estate market going to break? I said, I don't know. But if you're short subprime, when it does, you're going to make a lot of money. And so, I don't know when the dollar is going to crash. But if you're short the dollar when it does, you're going to make a lot of money. And the way I short the dollar is by owning gold, owning silver, owning mining stocks, owning companies outside the United States that the shares trade in foreign currencies, where their dividends are paid in foreign currencies, where they derive most of their income in those currencies. So I'm totally positioned to benefit from the drop in the dollar. And I think I'm going to benefit a lot more and make a lot more money personally and even for clients off the collapse of the dollar than I did off the collapse of the mortgage market.
Yeah, this recent $1.9 trillion stimulus, someone asked me the other day, where are they getting all this money to keep sending out to everyone? And I said, just look at your checkbook. It's coming from you. They're printing up dollars, and that's the money supply just continues to expand like a balloon. And
yeah, except the problem is people don't realize that when the Fed prints the money, that it costs them. I mean, people know that when the government raises your taxes and actually takes your money, you see, because the money comes out of your paycheck. And that's money you can't spend. And so that government spending has to be paid for. But when they just send out $2 trillion and don't raise anybody's taxes, a lot of people think that we're getting all this government for free. We're not. You don't get anything for free, right? When the government prints money and spends that money, right, there is a cost. Right? And that cost is measured in inflation. What happens is they inflate the money supply. That new money chases the supply of goods and services that exist because the government doesn't add to the supply of goods and services. It just prints money. It doesn't create new goods and services to spend the money on. It just creates money. And now people spend that money on the services and the goods that were already there. And so now in order to clear the market, prices have to go up. Now everything that you want to buy costs more. And because stuff costs more, you buy less. And that's the same thing as you buying less because you have less money. Now you're buying less because your money has less purchasing power and the prices go up. I have a special report that's on my website. People should download it. It's free. It's called Tax by Inflation because inflation is a tax. And first you need to understand what inflation is. And once you know it's a tax, then there are things you can do to avoid it. And that's what the special report. So if you go to Europac.com, EUROPAC.com, I think on the front page of my website there is that special report, and just download it and read it. But yeah, inflation is going to be a horrific tax. It's going to hit most those that can least afford to pay it. It's very regressive. It hurts the middle class and the poor the most.
And it hurts also people with,
in a way, it helps
senior citizens, as
yeah.
well, who live on a fixed budget.
Oh yeah. In fact, a lot of people who are retired are going to end up having to leave retirement early, because their money is not going to cut it anymore. I mean, their money is going to retire, and then they're going to have to go back to work. That's the problem. But so if you know this tax is coming, you can do something to avoid it or mitigate it at least. And that's the point of the special report. But people just don't get how bad this is going to be. I mean, very few people even remember the 1970s. I mean, I remember them, but I was a kid. I mean, I wasn't an adult. But people read about it. Oh, stagflation, we had high inflation, a weak economy. Well, what we're going to have now is going to be much worse. It's not just going to be stagflation. It's going to be an inflationary depression. And, we could be at a 4% CPI this year, which probably means that the actual CPI is closer to 10, if not well north of 10. But the whole idea of those whip inflation now buttons, the reason they were a fraud is because the government tried to pretend that inflation was somehow caused by the public, and that if the public got together, we could whip inflation. But inflation was caused by the Federal Reserve. They were the ones printing all the money. The prices were going up as a consequence of that inflation. Right. So farmers weren't causing inflation by raising prices. The Arabs weren't causing inflation by raising the price of gas. Unions weren't causing inflation by demanding higher wages. All of this stuff happened as a result of money losing value. Because money had less value, stuff was more expensive. When we started sending Saudi Arabia dollars that had lower purchasing power, they had to raise the price of their oil. That's what happened. So the public couldn't whip inflation. The Federal Reserve was causing inflation, and the government was lying about it. I always remember. Did you ever watch the show All in the Family?
Yeah, sure.
Yeah, I remember there was an episode of All in the Family when Archie Bunker or whatever, they were talking about the win buttons. And then Mike, the meathead son-in-law, said, you better get down to the store because they're about to raise the prices on those buttons.
But, for average people, just to go on Zillow, for example, and just look up in vacation areas, parts of Arizona, parts of California, there are bidding wars on housing prices, second homes that people are buying, that the starting point is the asking price, and you have 4 or 5 people bidding up the price to 30 to 40 to 50% higher. And I asked one broker, why is that happening? He goes, because money is zero, and meaning you're making zero in the bank, you might as well own a house that you could enjoy. And
but also remember, back then, people were buying these houses with other people's money. They were putting nothing down, so they had nothing to lose. And the interest rates were low. I remember I was in a cab ride in San Francisco or something, and I was talking to a cabbie who had just bought, $500,000-$600,000 house. He's a cab driver. And I talked to him about it. He goes, yeah, it's really, I think it's crazy, but I'm buying it with zero down. So what the hell? I mean, if I actually had to put my own money into it, I don't think I'd do it.
Yeah, but Peter,
he didn't care.
But that was then. I'm talking about now. I was just vacationing in Arizona, and the tour guide was telling us how he moved from San Jose, California to Arizona, and there was a bidding war on his house. I think he was asking $600,000, eventually went for $800,000. Yeah. And then when he got to Scottsdale, he had to up his bid over the ask price because everybody was buying these things. He goes, I said, why were you spending this? My mortgage, he said, is virtually going to be, 1 or 2% or so, and my money's earning zero in the bank.
Yeah, a lot of people have been enticed into the market by the lowest mortgage rates, in their lifetimes. But also there is a quick rush. A lot of people who are living in cities, now have rethought their whole lifestyle in the wake of COVID and, working from home. And so you have a lot of people that are living in these cities that are suddenly looking at the suburbs or looking at other areas, and they're all rushing. and there isn't a lot of new supply on the market. But yeah, I mean, it doesn't necessarily have to be related to debt. Look where I am in Puerto Rico, in my neighborhood. I've never seen anything like this.